Hi, and welcome to Living in Central Texas. I'm Andrea Dudek, Realtor and Associate Broker with Vista Real Estate.
I'm Jacob Studdard. I'm a mortgage broker with Edge Home Finance.
So you're curious what a $310,000 home will cost you in terms of monthly payment and overall costs in buying. Well, stay tuned. We're going to cover it all. So if you're new to my channel, don't forget to subscribe and like this video so that you can stay up to date on all things real estate in Central Texas.
Disclaimer, this is not an offer to lend. This is just for general educational purposes. Obviously, each person is going to be subject to their own credit check, full pre-approval and credit approval, the whole nine. So this is just for educational purposes only.
Check out this like-new Omega-built home in the Groves at Lakewood Ranch subdivision in West Temple. Welcome to 10211 Becker Drive, Temple, Texas 76502. This home was built in 2018. It is 1,802 square feet, 3-bed, 2-bath. It is 3-sided stone masonry with vinyl plank siding. On the back, it has the cutest pergola in the back that's lit up so that you can have cocktails, coffee, whatever you'd like on the back patio. Today we'll be giving examples of monthly payments and closing costs associated with conventional, FHA, and VA loans. Conventional loans.
All right, so if you're a conventional buyer and you're looking to do a 20% down payment, you can estimate your total monthly payment at around $22.75 a month. That's going to include your principal, your interest, your property taxes, and your homeowner's insurance.
Each person is going to have their own unique set of circumstances and factors that change and tweak those numbers a little bit. Now, what about in terms of closing costs for a conventional buyer?
Yeah, so in terms of closing costs outside of your down payment, you're looking at anywhere from 2 to 4% as your total closing costs. So that's going to be based off of the sales price, and that's going to include, your property taxes, your title fees, prepaid interest, homeowners insurance premiums. Pretty much encapsulates all of them.
So for a conventional loan, this home priced at $310,000 might look like?
Yeah, so down payment wise at 20%, it's going to be $62,000 down. Now, if you factor in the closing cost on top of that, you're going to expect to pay, in addition to the down payment, around 6 to 12 grand additional on top of that, depending on the actual closing cost amount.
So we are currently in a buyer's market, which means that we're able to ask the seller to give concessions, which means give money essentially to do things like pay your closing costs and even buy down your rate. We can't do anything about your down payment. That is a lender requirement. So you will have that 20% down, or with a conventional loan, what's the lowest you can go?
If you're a first-time home buyer, you can go down to at least 3% in most cases.
For a conventional loan.
For conventional loans, yeah.
So 3% to 20%. And again, the down payment you have to pay for, but we can ask the seller to contribute towards your closing costs. And there's some little tricks in there as your realtor that I can advocate and try and get those for you. So that's a win-win for everybody. So that's our conventional.
Absolutely. Yeah, one of the big things about being in a buyer's market and kind of offsetting the increase in prices and rates and all those good things is you can have a great agent on your side that will negotiate on your behalf to try and cover some or all of the closing costs in form of seller credit. Essentially, what discount points mean is you're going to be charged 1% of the loan amount to buy one discount point. So it's based on the loan amount. So in this case, you're looking at somewhere around $2,400 for one discount point. Now, one discount point does not equate to one full interest rate point down. Depending on the market that day, it might equate to a quarter of a point to a half a point. It really varies depending on every day.
So we have some little tricks as realtors. For example, instead of asking for the seller to take $20,000 off the purchase price, $20,000 off the purchase price over the course of a 30-year note is going to be very minimal in terms of your monthly payment. And the average buyer does not live in their home forever. And so we can have that discussion where let's take that $20,000, and instead of taking it off the purchase price, let's ask for it to go towards concessions of closing costs and rate buy down. And if you buy down the rate, if we take that same amount and buy it down 2 points, then the amount that you're saving in your monthly mortgage because your rate is lower is going to be far greater than if you were to take $20,000 off the purchase price.
Exactly, and that's a really neat trick, and it causes for a little bit of creativity, right, or calls for it. But essentially, what it's going to do is that $20,000, right, is going to be expanded over 360 months. So really, in the grand scheme of things, it's not that much money. Whereas your interest rate is going to be applied every single month, right? So if you're able to take that difference and use it towards a rate buy down, in most cases, the math is going to work where it makes sense to use that 20 grand to buy your rate down versus cutting off on the purchase price. Absolutely.
Okay, great. So let's take a look at number 2.
Yep.
FHA loans?
Yeah, so FHA, if you're an FHA buyer, you can be looking at a 3.5% down payment, which equates to roughly $10,850. So that's a choice. You can go higher if you'd like. Now, total monthly mortgage payment, your estimate is going to include your principal, your interest, property taxes, homeowners insurance, and your mortgage insurance will be included on FHA loans. All in, you're looking at somewhere between $2,500 and $2,600 on your total monthly payment. And
closing costs, are they different at all for an FHA buyer?
They are not. They're not going to differ between each loan type. So those closing costs are pretty much set regardless of which loan type you use.
Okay, so FHA loan, we have how much for a down payment?
Yep, $10,850 down. And then if you use just a general estimate on closing cost, say somewhere around 3%, you can estimate about $8,500 to $9,500 in closing costs, depending on actual values.
And again, that down payment cannot be paid for by any party other than the buyer. Yep. It's a lender requirement. It's skin in the game. It shows good faith for the lender, and so the seller cannot contribute towards that. But again, we can try and make negotiations for the seller to contribute towards your closing costs. Number 3, VA loans.
Yeah, so VA loan, if you're a veteran and you're looking to exercise your VA loan, which you've well earned, you are looking at an option of a 0% down payment. It's optional. Most veterans will select the 0% down, which is fantastic. There's no other loan type like it. It's one of the best loan types out there. So for a total monthly payment, you're going to be looking at about $2,550 to $2,650, depending on actual values on the VA loan.
And then we'll still have the same closing costs. We can still ask the seller to contribute to buy down your rate and reduce that monthly payment a little bit. Again, negotiable. And again, want to put out there, this is a very broad statement, but just to give you an idea in this market of what some numbers might look like for you and what $310,000 translates to in our area.
Yeah, absolutely.
So if you are looking to buy or sell a home like this, if you'd like any more information, you can find both of our contact information below in the comments. You can also book a call with me on Calendly, again in the comments. We'd love to speak with you. We'd love to discuss your particular situation and the goals that you have for yourself or your family. Again, I'm Andrea Dudick with Vista Real Estate.
I'm Jacob Studdard, mortgage broker with Edge Home Finance.
Till next time. Bye.
Thanks.